This is one of the most uncertain times that I can remember in my lifetime. We have a big question on Brexit, which also has political ramifications about potential new general election, and overseas we have Trump and trade war worries as well. So right now seems a really good time to be holding a fair degree of cash.
Every year people try and work out what's going to happen to interest rates, and this year's no different. In 2019 the markets are pricing in a rise, but unfortunately there's just so much uncertainty around at the moment, particularly regarding Brexit, that it makes it impossible to work out what's going to happen next. Even if rates do rise, there's no guarantee that that will get passed on to savers. If we look at 2018, rates rose above 0.5% for the first time in a decade, but unfortunately that wasn't passed on in full.
The trouble with holding cash, of course, is inflation. And inflation is running at 2.5%, which sounds quite low, but over 20 years halves the value of money. So it's really important to get your cash earning as much as possible. And that means actually moving your money around quite a lot. In my time, when I was much younger, rates were more competitive and stayed more competitive at places for a longer period. That's no longer true. So you need to be ready to be able to move, and you need a flexible place to be able to move that money around.
We think for most savers the right strategy is to get the best possible rate you can today. Unfortunately, people tend to neglect their cash, so our research shows that half of people don't know what rate they're getting, and 2 in 5 have never switched. And that's a problem because at the moment the average easy access account is only paying 0.25%. And you can easily get 4 or 5 times that, or more, if you use fixed term savings.
One way to look at your cash is to really divide it into perhaps two. You always need money that's instantly available. Most people would like to keep, say, 3 to 6 months' salary back, so have that in an instant access account. But for longer term savings, maybe for a wedding or a car, you might look at a fixed term deposit where rates are particularly good and where you won't need the money immediately. For much longer than 5 years or 5 years plus, I'd look at more risky assets like the stock market.